As far as gold is concerned, and as far as silver is concerned, I think that there's a high probability that what we've seen really, as far as I'm concerned, since June 12th, with gold down about $100 and silver down about $1, is not a reaction. It's a strategy. It's a strategy that is implemented in the form of a methodical decline. And that decline started Sunday night. It hasn't stopped. This is being done by the bullion banks, who want you to believe the narrative that it has to do with, the ceasefire and moving from, risk off back to risk on. This is price suppression, period. And I say that to you for the biggest reason is that tomorrow is option expiration on COMEX, and Friday pushes the front end month, July, silver contracts into delivery. So there's a lot at stake, the end of month, the expiration, and the July silver contracts which go off the board. You have the second largest short position by the banks in silver in the history of the COMEX market. So, in fact, I said this on a couple of podcasts that I expected there to be a pullback into the weekend as a result of this. My guess is Monday you would see things move the other direction, perhaps Tuesday, simply because you have this big deal happening on Monday. So with the end of the month contracts moving off the board and the first day of notice for the July contract. But look, as far as what's happening, people, I think, are too reactionary. They think too much in the moment. The bigger picture was looking very positive for gold and silver long before this 12-day war that we've now seen in Israel and Iran. So, I think it's has less to do with geopolitical events and more to do with commercial bank positioning right now on COMEX, and they have to push it down right now because of this massive short position. If not, you're talking existential threat to the survival of some of these banks who have this massive short position. So I expect it to be short-lived and then resume its upward trajectory the way it had been going for the past several weeks now. I think they're doing it in gold already. They're beginning to mitigate in gold. It's like they're losing control. But they want you to believe that this is a safe haven unwind. That the only reason that they'd gotten this high is because of the tensions in the Middle East. And they forget that it had been going that high long before this. But yeah, I think in general what you're witnessing is maybe the realization by some of these banks that being short and having to use this much ammunition to hold down the prices is silly. Since Trump was elected, Jared, there's been over almost 820 tons with a T of gold have stood for delivery, and almost 9,000 tons of silver.
That's a lot.
This surge of deliveries into COMEX warehouses is crazy. And this is long before we've seen any problems with what's happening here in the Middle East. So at some point, when we see such physical demand, not just on COMEX, but in the LBMA and all around the world, I think continuing to be naked short is very silly. So I would like to think that we're getting closer to that, because it seems like we've already crossed that line with gold, where they're really not trying to knock it down quite the same way that they did.
There are days when I feel like a broken record, saying the same things over and over. But I'll keep doing it because this is too important to sugarcoat, too urgent to water down. We are living through one of the most distorted, manipulated, and ultimately fragile financial moments in modern history. And gold and silver sit right at the center of that storm. Now look, you can turn on CNBC right now and they'll show you a chart with gold down $45 on the day or silver down $1, and the smug commentators will grin and shrug. Well, there you go, gold's losing its luster. They'll blame it on some ceasefire headline or a jobs number or whatever narrative they need for the hour. But what they'll never tell you is that this is a carefully engineered dance, not a natural free market move. And if you understand that, if you see the fingerprints of the bullion banks all over these pullbacks, then you understand why I keep pounding the table on owning physical metal outside this broken system. Just look at the COMEX. We've got the second largest concentrated short position by the banks in silver in the entire history of that exchange. Wrap your mind around that. These aren't tiny trades. This is a coordinated effort by the biggest players on Wall Street to keep a lid on something they simply cannot afford to let run wild. Why? Because if silver were allowed to reprice naturally, according to real supply and real demand, it would blow the doors off this charade and expose the level of rehypothecation, the sheer leverage built into the paper markets, and that would be an existential threat to the entire system. And this is why you see what I call methodical declines. You notice how it's never a waterfall. It's never panic selling from genuine holders. It's always death by 1,000 cuts. The decline starts Sunday night, thin markets, algorithms turned up to max volume, small contracts pushing around massive prices. Then day after day, you see them lean on it, push it down a little further, just enough to trigger technical stops, just enough to create that illusion of weakness. And right on cue, the mainstream media jumps on the story. Gold falls on easing geopolitical fears, they'll write, or silver slips as traders rotate to risk assets. Never mind that this exact same story has been used 1,000 times before. And I'll tell you something else, folks. These games are always timed around key contract expirations. Tomorrow it's option expiration on COMEX. Friday pushes the front month July silver contracts into delivery. You think that's a coincidence? No, it's by design. They need to ensure as many of those options expire worthless as possible to cap their own exposure. Because make no mistake, these bullion banks are naked. They're holding positions that, if forced to deliver on in full, would bankrupt them 10 times over. So they lean on the paper market, they sell phantom ounces that don't exist to keep the system going just a little bit longer. Now, some people might listen to that and say, Andy, come on, you sound like one of those gold bugs with a tinfoil hat. But here's the reality. Since Trump was elected, we've seen over 820 tons of gold stand for delivery on COMEX. That's not a conspiracy theory, that's a hard, verifiable number. And for silver, nearly 9,000 tons. That's a surge of deliveries into COMEX warehouses like we've never seen before. And you know what's even more interesting? This was happening long before the recent conflict in the Middle East, long before this latest risk-off scare the media is parroting. In other words, there's something much deeper going on. This isn't about traders hedging short-term political risks. This is about sophisticated, well-connected players, sovereign wealth funds, central banks, ultra-wealthy family offices, who see the writing on the wall and are quietly vacuuming up as much physical as they can while the price is still artificially cheap. You want proof? Look at China. Everyone knows the People's Bank of China has been officially reporting gold purchases for years. But what most people don't realize is that China set this strategy in motion back in 1983, when they gave the PBOC sole responsibility for acquiring gold and silver for the state. That's 4 decades of quietly accumulating the world's hardest assets, while the West laughed and loaded up on debt. And it's not just the official sector. China's state-run media is literally telling its citizens to buy gold and silver. They've rolled out national programs to promote personal precious metals ownership. Can you imagine CNN running a segment encouraging Americans to buy silver eagles? Of course not. Meanwhile, on the supply side, we've got a mess brewing that almost nobody's talking about. Silver is not just money, it's also an irreplaceable industrial metal. It's in every solar panel, every electric vehicle, every 5G tower, every missile guidance system. And the military applications alone are staggering. I've had personal conversations with insiders who worked on the Tomahawk cruise missile programs, telling me it's loaded with silver, upwards of 13 or 14 kilograms per missile. Multiply that by thousands of missiles, drones, advanced radar systems, and it's no wonder the military-industrial complex has every incentive in the world to keep silver cheap.
Now people look at gold, what's it down today? Let me take a look. You look at gold today and it's down $45. It sounds like a lot, but it's, it's a 1.5%. That's nothing. It's just that as the prices go higher, percentages seem bigger for sure. But yeah, I think that ultimately all manipulations end poorly, and I think this one will be no different as far as I'm concerned. So stay the course. The physical demand is overwhelming. The ability of these banks to easily suppress the price to the point where they have to have the second largest concentrated short position by the commercial banks in the history of the exchange for the July delivery. That tells you that we're getting, I think, to an environment where being naked short like this is really probably not worth the setup probably isn't worth the return when you talk about potential fallout. Silver, on the other hand, across the board represents, in my opinion, value of a generation. When I think of silver, I think of the word asymmetrical, lowest downside, highest upside. But with all of this said, the only people that are taking advantage of that are the most sophisticated, well-informed traders in the world. And why I say sophisticated is because the amount of deliveries coming off of COMEX is record-breaking. It's groundbreaking. And it's not an easy thing to do. These are people that are very connected, they are very smart, and when they're pulling off as much metal off of the exchange as they've been doing, where are they moving it to? And who's taking possession of it? And these are things that I think people need to think about. Who's got the ability to stand for delivery to that degree in gold and silver, silver in particular? The public, I think, Jared, is missing this largely, but those that have been buying have been focusing on silver or platinum. The thing to keep in mind more than anything right now is that they're panicking, they being the banks. They're trading over 350 million ounces of paper daily to suppress the price, Jared. And last I looked, somewhere around 960 million ounce short interest. You want to talk about the potential for a short squeeze? That's why you could have all but guaranteed the price was going to come down here leading into the end of the weekend because of the options expiration, the end of the quarter where, the LBMA and then the COMEX, these are important end of quarter numbers. And then, of course, the July contract rolls off the board on Monday, first day of delivery. And so all of these options, all of these derivatives, they're trying to keep the price down so that they finish out of the money. And then typically the way this works is that Monday afternoon, bang, it goes right back up.
Yeah.
This is just the same bullshit they've been doing for a long time. But one of these days they get caught with their pants down, the way that Bear Stearns did, which is largely why they went out of business, because they were on the wrong side of this. And so while we're really doing by playing this suppression game is playing right into the hands of the countries that are standing for delivery and the big players standing for delivery at subsidized prices. Eric Young, King Kong on Twitter says that the Chinese are part of this now too because they know exactly what we've been doing and they're like, fine, we'll beat you at your own game. We'll play the paper price, we'll suppress the price, and then we'll stand for delivery as well at stupid subsidized prices. So I truly believe we're coming to the end of this game. And the desperation that they had to use here at the second largest concentrated short position ever on COMEX in silver is evidence of that.
So let's just keep pulling on this thread for a bit, because when you really break it down, the insanity of this moment is almost too large for most people to process. We've got a global financial system that's leveraged to the eyeballs. That depends on confidence alone. That literally requires you to believe in its narrative every single day, or it collapses under its own weight. Meanwhile, the cornerstone asset of monetary history, gold, and its turbocharged cousin, silver, are being systematically drained out of Western vaults and flowing east at an unprecedented pace. And let me drive that home again because it's not a throwaway line. We are witnessing the largest migration of monetary metals from west to east in modern history. China, India, the Middle East, the BRICS bloc, they are buying gold and silver hand over fist. They're doing it quietly, they're doing it systematically, and they're doing it with a long-term plan that stands in stark contrast to the short-term gambling we see in the US and Europe. You look at India, just in the last 12 months, they imported more silver than they've ever imported in their recorded history. At the same time, China keeps increasing import quotas for commercial banks, green-lighting even more gold and silver inflows. They're encouraging their citizens to own precious metals the same way we encourage Americans to binge Netflix and buy overpriced tech stocks on margin. That's the cultural gap. One culture is playing chess while the other's busy playing TikTok. Now back to the heart of this. the COMEX and the LBMA. If you're new to this, let me break it down as simply as I can. The COMEX is basically the casino where all these paper gold and silver contracts trade. You've got banks trading contracts representing hundreds of millions of ounces of silver every single day. Last week alone, we saw nearly 1 billion ounces worth of silver traded in 2 days just to keep the price contained below $37. That's not real silver. That's paper. That's claims stacked on top of claims, leveraged up in a way that makes the 2008 mortgage crisis look downright quaint. And here's what's so absurd. The entire COMEX registered silver inventory that could theoretically be delivered is around 26 million ounces. That's it. That's all they've got. Less than 1 day's worth of paper trading volume, and even that figure is misleading because a huge chunk of that is already spoken for by long-term holders who aren't going to let it go. So when you see these short positions of 950 plus million ounces, what does that tell you? It tells you this is a tinderbox waiting for a match. All it takes is for enough people to stand for delivery or for 1 or 2 big players to say, you know what? Send me the bars, and this game ends. And we're seeing the early stages of that. Physical deliveries off the COMEX are running at record highs. The LBMA in London, which is supposed to be a T+1 settlement market, meaning you get your metal the next day, is now pushing out to 8 weeks. 8 weeks! They'll tell you it's because of logistics and truck shortages. Really? The City of London, the Bank of England, can't rent a few trucks to move some gold and silver bars? Come on, that's your giant blinking neon sign that says, there's way less metal here than advertised. And while all this is happening, the mainstream investor is asleep at the wheel. They're chasing AI stocks, meme coins, flipping options on garbage companies, completely oblivious that the very foundation of their purchasing power is cracking. You look at the US debt, we just crossed $35 trillion, growing by $1 trillion every 3 months. The interest payments alone are now crowding out every other part of the budget. And the only way out is the same way every indebted empire has gone, by destroying the currency through inflation. And by the way, the BRICS nations see it too. That's why they're talking about trade settlements outside the dollar. That's why they're accumulating gold at a record pace. Because they know, just like Charles de Gaulle knew in the 1960s when he famously said the US was enjoying an exorbitant privilege by printing dollars to buy the world's goods, that this game is ending. Back then it ended with Nixon closing the gold window. This time it's going to end with a repricing of gold and silver so violent it'll make the 1970s look like child's play. Now let's pivot back to silver for a second. I keep saying silver is the most asymmetric trade of our lifetime, and I mean it. We're not just talking about a commodity that's underpriced. We're talking about a monetary metal that's also an industrial, critical input, where supply deficits are growing every year. The Silver Institute's own numbers show we're running annual deficits north of 200 million ounces year after year. We're literally consuming more silver than we mine and have been for most of the last decade. How long do you think that continues before something snaps? And it's not just theoretical. The mines simply aren't there. You don't have massive new silver projects coming online. Most silver is mined as a byproduct of lead, zinc, or copper. So if base metals slow down because of a global recession, guess what happens to silver output? It falls even faster. Meanwhile, demand from solar panels, EVs, and electronics keeps rising. It's the perfect storm. Add on top of that the naked short positions by the bullion banks. You've got a situation where the paper market is leveraged 300 to 1. That means for every real ounce of silver, there are 300 claims on it. What happens when even a small percentage of those paper holders decide they want delivery? You get a short squeeze that'll make the AMC or GameStop fiascos look like nothing. And let's not forget who's stepping in and buying. It's not your Uncle Larry putting a few coins in the safe. It's state actors, sovereign wealth funds, Chinese SOEs, massive family offices. They're not trading for a quick flip. They're taking metal off the market permanently. When the music stops, it's these guys who'll be holding the real assets, while the masses will be left waving their brokerage account statements, hoping they can cash out for something that still buys bread. I want to also touch on human psychology here, because this is what's going to turbocharge this whole dynamic. Most investors, even smart ones, do exactly the wrong thing at the wrong time. They chase tops and sell bottoms. They buy high when everyone's euphoric and sell low when everyone's panicking. That's how markets work. They're driven by fear and greed. And in precious metals, it's even more pronounced because it's ultimately a hedge against systemic risk. When people finally see the cracks, they panic buy. You can already see the early stages. I talk to wholesalers every day. Premiums on physical are creeping up again, even before the big retail rush has started. There's still supply for now, but it's tightening. Once the crowd realizes the dollar's in trouble, whether that's because the Fed panics and cuts rates into rising inflation, or because we have a treasury market accident with yields spiking, the gold and silver markets will go vertical. And when that happens, there will be no supply. Dealers will simply stop quoting. You'll call up looking for Eagles or Philharmonics or Maples, and they'll say, "Sorry, we're out. Call back next month." Maybe. That's why you have to act now, when it's boring, when it's frustrating, when the mainstream is telling you it's dead money. That's how wealth is built. You buy the assets nobody wants when they're artificially cheap, and you hold them through the volatility. It's not easy. If it was easy, everyone would do it, and the opportunity wouldn't exist. But the people who do it are going to come out the other side of this with generational wealth. And I'll leave you with this. We're witnessing what I believe is the final phase of the Western financial experiment. We've stretched this fiat regime as far as it can go. The debt is too large, the deficits are too entrenched, the political system too divided to ever pay it back or even stabilize it. The only option left is to inflate it away. That means the purchasing power of your dollars, your euros, your yen, it's going to drop like a stone over the next decade. Meanwhile, gold and silver aren't liabilities. They aren't promises. They're no one else's counterparty risk. They're pure monetary assets that have outlasted every empire, every currency, every scheme. When this house of cards finally tips over, whether that's next year, 5 years from now, or a decade from now, you're going to see a mad scramble for these metals like nothing in living memory. So yeah, maybe today gold is down $40. Maybe silver's down $1. Big deal. Look at the bigger picture. Look at the trend of sovereign buying. Look at the drain of metal from COMEX and LBMA. Look at the debt trajectories. Look at the erosion of trust in institutions. That's the real story. And that's why I keep telling people, get your insurance in place now. Get your wealth out of the system while it's still relatively painless. Because when it's not painless, it's too late.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.